Good evening, everyone. This is Anne Marie. I haven't done a SPY report in a long time, so taking care to do that right now. I do want to jog your memory a little bit. This should be a very familiar pattern. It is the butterfly that we have been looking at that began in 2007. Coming into completion right here. This is a bearish butterfly, but we do notice that it's shaded all the way up to 214. So the SPY literally could get all the way up into that level and still not have broken the formation. So far, it is breaching out and up over those levels, expanding into the 127 to 1618 region, which is what that would be. A line for the midpoint of that is not a bad one to have. So let's do that. We can take a look at that very, very quickly. I just wanted to give you a heads up in terms of what's going on overall in the charts. And so what we are seeing is a very systematic climb. Let's take a look at this really closely. In the meantime, we can take a look at something simple like an RSI, and we can see that we are still holding trending levels. Notice low, higher low, higher low, higher low, right? Perhaps not at the same steepness, and that tells us that momentum is drifting a bit, but it is still holding to the upside, and we should expect that these pullbacks should be into nothing but general support. I do want to show you this. I don't know if you can see this outside of our levels. Let's pull that down. Maybe up into here. Let's make that 185. Charts are by Motive Wave. Great platform, actually. All right, so let's take a look at what's going on. Let's magnify this region, and we'll talk about the same things that we've been looking at for many, many weeks since October of 2013. Take a look. This region, almost identical in size to this region, almost identical in size to this region, almost identical in size to this region. Notice what had happened. 1, 2, 3 took us 3 movements across 3 months, literally, almost 4 months. And then within a few weeks, we take all of it back down to the base of the original breakout area. We hold the region and we begin to pop again. We pop straight up into the base of the channel. We hold the channel. Now we know once we hold a channel, we first go to the midline and then we go to the top, which is exactly what it did. And wouldn't you know it, it gave us another almost exact reading in the distance between this box that was 4 weeks long and this box, which is 4 weeks long, right? Now, it's not been there 4 weeks to get through this region, so it just got here maybe a week, 2 weeks ago. All right, so it still has room to run, and let's start that right here at the opening of the box. If it runs the same amount of time, we are looking for something to take us into the edge of March. Now, what do we expect the chart to do? Well, it's got a big decision zone right here, and let me show you what that is. It's sitting at the midline of this range of motion and major support because it is at the base of a gap. If it falls into the gap, it will more than likely fill it. See the double gap event here? There's a lot of market auctioning that has not occurred in this space. We moved up, we gapped down, we gapped back up. Very sloppy range of motion. How can you trend trade when things are gapping on you like that? There's no comfort event that you're sitting on the right side of the trade whatsoever. That being said, we are looking here. We've got the 50, the VWAP, the 8, all coiled in this region. If we break up and over that 187.88 area or so, we're going to be able to get back to the top of the channel. If it breaches out, we've got a nice run forward, perhaps the width of this move, which is 3.95 points, right? So we could have something up that far. We know we probably have a couple points from base to top here if it holds this midline. Now, this space is the gap. And so let me pull this down just a bit into the region. Yes, that's a little bit better. And so we are seeing that this range of motion should, if it loses this level, it should fill the gap, and then the 200 on the hourly begins to take precedence. Now, taking a look at the RSI, it is continuing to trend upward from above, but a little messy from below. It is trending upward from here to here, but not from here to here. So nothing really looks out of whack. Formations aren't telling us anything in general. If we look at the entire RSI, we can see that we began to show divergence somewhere at the beginning of the second week of February, and it has continued until this last batch of movement where it's popped right back up. So listen, we could still have a hold and still move. What's the moral of this story? You shouldn't be putting on long-term trending trades or trades that are anything more than short-term trades right now, because the market is still undecided. It is moving upward and then pulling back, and then moving downward, and then popping forward. The charts are unresolved. Allow them to resolve. Take short-term trades or sit on your hands. And if you are getting disgusted because you are being stopped out of your trades because of the gap, stop trading until you catch the rhythm, okay? And right now, as I mentioned earlier, today, in one of the rooms that I was talking in, it is a little bit like jazz music, not quite a steady tempo, okay? And so we really need to be careful for that and just pay attention overall. Hey, good luck trading. I know it's been a long time since I have talked about the SPY, but it essentially has been doing a little bit of nothing, and that gets very, very old to talk about. But I do want to tell you that right now it's sitting at a pretty fair decision point, and that decision point should give us directional momentum in one way or another. All right, good luck trading tomorrow.